Well, the market began the session with a little gusto as investors were excited by the idea that President Trump could be returning to the White House while still holding out hopes that Congress will push through a stimulus plan. The president also talked up the market with a series of tweets. Meanwhile, the session is now exactly the opposite of Friday, where traditional safe havens were higher while technology was the worst performer. Now, even today, technology, not the biggest winner, as investors seem really now focused on value and industrial material names. But there are issues that are facing investors. Until major indices clear certain hurdles, these rallies could probably keep falling short. For me, the key numbers you should know: on the S&P 3,400, on the NASDAQ 11,326, and the Dow just barely above 28,000. So how should investors cope with increased volatility, which seems assured as we head into the election? And is it finally time to ante up on the laggards? Let's ask Money Map Chief Investment Strategist Shah Gilani, Bolvin Wealth Management President Gina, and Cresset Wealth Management Jack Ablin. Hey, Jack, I want to start with you because you've been concerned the last several times you've been on the show about the economy, about the stock market, and now, of course, you add in volatility. What do you make of it?
Yeah, I think that this, relief, I think, is certainly welcome news. I also think there may be a chance that this contested election scenario, which is out there and has been really concerning a lot of investors, may actually be reduced, given the fact now that Biden's election chance has improved by 14 percentage points in response to President Trump's COVID diagnosis. So there is a interpretation that perhaps a Democratic sweep with such an overwhelming force would mitigate any chance of a contested election.
Shaw, your thoughts as we become a little bit more volatile in this market?
I'm increasingly optimistic, Charles, and I agree with all of your numbers. Your three numbers on the benchmarks are exactly the levels I'm watching, and I'll add to that all of the benchmarks are above their 50-day moving averages now, which technically is a positive for them. They were incredibly resilient last week as investors poured money into stocks in spite of a lot of negative political news, and certainly on Friday when the market could have ended up the day really to the downside dramatically, we ended up pretty much okay given the fact we were down. We ended up 1.9% for the week on the Dow Jones Industrial Averages, and the other benchmarks are up 1.5%. So investors are buying into any dips, and I think they're going to continue to do that no matter who wins the election.
You know, Gina, I agree with Shaw. You go back to September 23rd, the S&P was off 2.4%. Ever since then, even on down days, we don't close at the lows of the session. Now, September was a rough month, but do you get a sense that maybe we're turning the corner here?
Well, let's talk about the increased volatility. I think that it's been expected as we head into an election. October, before an election, is generally volatile. But I do think that this volatility is short-term, and once the election is over, even if it is a contested election, we are going to have a president, we are going to have a winner, and we think that there's a very strong case for a bull market.
So you're not concerned about policies, taxes, regulations. What else? What counters that for you in terms of the bull market scenario?
Well, one of the reasons we think there's such a bull market, that we think a bull market is just beginning, is that we haven't even seen a positive GDP yet. So last quarter, we saw a negative 32% GDP. Estimates are 25%. Some even think 30%. We've also seen incredible increase in consumer confidence. And history tells us with that type of increase in consumer confidence that we're at the beginning of an expansion, and that this recession, is close to being over. And let's also not forget low interest rates. Interest rates are at zero. And when you have stocks and you have bonds, we see that investors, if investors want growth, they're going to have to go into stocks. Yeah,
no doubt about it. And to your point, I've been very impressed with consumer sentiment and confidence numbers from last week. Shah, let me go back to these resistance numbers for a moment. Not everyone uses technical analysis, but they really, really work when you have a firm resistance points like this. Let's talk about what happens if we break out through there. Would that be a clear shot to retest the September 2nd highs?
I think so. There's really no really strong resistance above any of your levels, Charles. And another thing I'm going to point out too, because we brought up volatility, we're seeing volatility in terms of the VIX actually increase on days where we're seeing rallies. That's not a negative, that's a positive. The reason the VIX is increasing on days where markets are going up isn't because people are buying puts, they're buying call options. That's how optimistic they are. They're actually buying calls. That's increasing the VIX on up days. That's another positive sign that I see, whether those are retail investors or institutional investors following retail investors in. There's a lot of bullishness out there.
You know, Jack, speaking to that bullishness, if we do get one of these scenarios where it feels like the train is leaving the station, we've seen all year long where that can really trigger some serious, big legs to the upside. Do you have any vision about perhaps, even with all of the misgivings you may have or some of the anxieties we have overall, how far we could go to the upside?
Yeah, I think that, there is certainly a move to the upside if we do get an economic rebound and continued recovery. And while I am a little bit worried about the labor market I wrote about today, women now unprecedented leaving the workforce, a lot of them having to stay home, take care of kids or the elderly. Also, we're starting to see some layoffs in higher end jobs, as we saw in the airlines and the like. But that remains potentially temporary. And also the housing market is a huge multiplier effect. You get a strong housing market, and that really cascades along nearly a third to 40% of the economy. That really is if that's sustainable and that's self-sustainable, that could be ingredients for further growth in stocks.
Yeah. Right now, it feels sustainable on every front, right? From pending home sales to building, the contracts. We saw construction data last week. It was all about private construction. It looks like we've got some serious momentum there. And speaking of momentum, Gina, on the technology side, I just kind of noticed like Friday, technology was the worst performer. Now it's doing pretty good today. But it was interesting because investors rotated back in those traditional safe havens, utilities, real estate. The run in technology, everyone's been trying to guess all year long when that will come to an end. Do you think it's going to slow down at all?
Charles, I don't. I don't think it's going to slow down. And I think that any dip in technology would be an opportunity to buy. We think a broadening participation of the market is healthy, but we think that this healthy rotation isn't going to last, and we don't think it's going to be a long-term trend. Eventually, the recovery stocks will recover, but we think technology, based on increased earnings estimates, will continue to grow.
Shah, Gina's not as concerned about the election outcome. It sounds like Jack either, as perhaps Wall Street was. I guess we can make it a trifecta because also in your notes you're saying look past the elections, you got stimulus, earnings, and vaccines. If indeed we get all of those things going into next year, how much upside are we talking about?
We've got a tremendous amount of upside, I believe, Charles, especially going into the first quarter. Everything will be past us. The election will be over, whether it's contested or not, no matter who gets into the White House, no matter what the makeup of Congress looks like, we are going to see stimulus. We're going to get a lot of spending. We may get some tax relief, hopefully for the middle class and lower class, but we're going to get a lot of the stimulative effects that everybody's looking for. A lot of that is going to be very bullish for stocks. Right. And even if we get a lot of spending, we can see some inflation. That's bullish for stocks. So I'm looking forward to 2021 as being a very good year for the market.
Well, I love it when Shah Gilani gets bullish. Shah, Gina, and by the way, Jack, we talked a lot last week about what was happening with women in this recession. So we spent a lot of time on it. I'm glad you wrote about it today as well, my friend.